saw participation in the Russell 2000. We've been hammering away at this anchor from the high as well as last year's anchor. That's the black line. And now it looks like we're heading up to a test of the 200-day moving average and the 61.8% retracement of last year's high to this year's low. That's a 61.8%, precisely where the 200-day moving average is, up towards 216. I'm not really interested in trading the Russell 2000 because it's too erratic, but it does mean there's a lot more stocks participating, and that is what I'm focused on, is finding the ideas that are now starting to see the market broaden out amongst some of the smaller stocks. And they're doing it in spite of the bonds falling. So bonds continue to be garbage here. They had this brief, they had this undercut of this low, and we rallied right up to the, this is when the equities markets bottomed, was April 7th, but we rallied right up to that. We've got a declining 20 and 50-day moving average still, so I'm not interested in being a buyer in these bonds. I like it that the Russell 2000 was higher in spite of higher interest rates, because everyone tells you it's supposed to be the opposite way. And I always say, trade each stock based on its own merits, trade each market based on its own merits, trade the Russell based on what the Russell's doing, not what they're supposed to do in relation to the to interest rates. Anyways, the Russell 2000 looks like it's probably heading towards this 215. My interest, as I said, is not buying the Russell 2000, but if you're involved in it, I would say look for this general area 209.5 to hold as support next week. That's going to be the important level of interest that you want to see support hold if it does pull back to that level.